Good morning, members. It's the appointed time. We have a quorum. I call to order the meeting of the Bills Committee on Inland Revenue Amendment, Crypto Asset Reporting Framework and Amended Common Reporting Standard Bill 2026. Item 1 on the agenda, meeting with the administration. Let's welcome the officials joining us. Mr. Anson Lai, Deputy Secretary for Financial Services and the Treasurer, and also Mr. Benjamin Chen, Commissioner of Inland Revenue from the IRD and their teams. So we have received submissions from the public, rather different organizations. The Secretariat has issued 4 submissions. We also received the written reply from the administration, so those papers are set out on the agenda. Now, the matters arising from the previous meeting, the administration also offered a response to the issues raised at the last meeting. Can I invite the administration to take us through that paper? And if members have comments, please press the request to speak button. So now I give the floor to the administration. Thank you, Chairman. Good morning, everyone. I thank the Chairman and the members for continuing to scrutinize this bill. After the last meeting, we submitted 3 papers to the Bills Committee. So I will briefly take you through the papers. First, it's about the last meeting. Members would like us to elaborate on the nexus criteria. On the 2nd of July, we submitted the paper to the BC. So briefly, in line with the OECD's requirements, the nexus criteria come in 4 tiers. So first, whether the service provider is a tax resident of a tax jurisdiction. Second, whether this body is incorporated under the laws of a certain jurisdiction, whether tax returns are filed, and whether the entity is managed in a certain jurisdiction, and also whether this entity has a regular place of business in that jurisdiction. So the overarching principle is this. If this service provider has a stronger nexus with a certain place, and that entity has submitted all the materials for due diligence, etc., then this entity will not have to submit the information in the other place where the nexus is weaker. Now, if this entity has a branch that has submitted the materials, then even in the other place with a stronger nexus, the same materials will not have to be submitted again. In line with the members' request, we have set out a few points with an example. So briefly, if a service provider, crypto asset service provider, CASP, has been incorporated in jurisdiction X, but it also has a nexus with Hong Kong. So under the nexus requirement, this body will have to submit the due diligence papers in Hong Kong. And once that's done, this RCASP reporting crypto asset service provider won't have to submit the materials in jurisdiction X. Now, in the next example, if this RCASP is also a tax resident in both Hong Kong and the jurisdiction X, then it's up to this service provider to submit the papers either in Hong Kong or in jurisdiction X. If the papers are submitted in jurisdiction X, then the RCASP can simply notify the IRD in Hong Kong, and then the RCASP won't have to submit the same set of papers. Example 3, if this RCASP has a branch in Hong Kong, and then they are a tax resident in jurisdiction X, because there's a branch in Hong Kong, the relevant materials are submitted to the IRD in Hong Kong. So in that case, the RCASP will not have to submit the papers in jurisdiction X. So these are the 3 examples for members' reference. The second paper, we received 4 submissions from the public. We offered a consolidated response to members. So briefly, the 4 submissions covered a few points. So for the CARF, and we're making changes. Now, there are some ambiguities. There is an international consensus on this framework. we cannot depart from this agreed upon CARF. The same arrangement applies to other tax jurisdictions too. So we cannot make up our own definition. So there was a suggestion that if this RCASP has fewer transactions, can this provider submit less material or submit nothing? Unfortunately, that is not possible. We will need the RCASP to submit the details. What we can do is to facilitate the work to reduce the compliance burden of the industry. We covered that, so we can help you. Now, for dissolved CASPs or CASPs, there's a record-keeping requirement. We note members' suggestions. We plan to move amendments to reduce the industry's burden. So I will come to that in greater detail when we come to the draft CSAs. Now, on capping the fines, other tax jurisdictions do not set a cap on progressive fines, so we will follow suit. Now, for first-time offenders or inadvertent mistakes, we look at the circumstances in determining the penalty. On protecting data, before we exchange information with other tax jurisdictions, we make sure that jurisdiction has signed the same agreement. The OECD also requires tax jurisdictions to assess the situation. So the assessment has to go through before we hand over the information. On the internal side, we also have rigorous standards. We ask all our colleagues to attend briefings. They will take an oath of confidentiality. There are also rigorous tests such as security risk assessment, third-party checks. That's to make sure the data is safe and will not be leaked. Now, on the point about a dedicated website, on the CARF, the IRD will develop a dedicated portal. Why not share the portal with the AEOI portal, you may wonder. So we're facing two different kinds of players in the industry. The AEOI is for financial institutions. The CARF is for the relevant service providers. The information involved is also different. To avoid misunderstanding, we decide to maintain two separate portals. We try to make the website user-friendly in terms of providing information. Now, a point close to the heart of many, support for the industry. Once the bill is passed, we will hold briefings. There will be concrete guidelines, and there will be task forces to assist the industry to keep the cost low while they can comply with our requirements. So hopefully these measures will help the industry. We also have another paper, and that is the draft CSAs. So briefly, I'm sorry, Mr. Duncan Chiu has a question, and then we come to the draft CSAs. Mr. Duncan Chiu, 4 minutes, question and answer inclusive. There's a point about the nexus requirement, item C. Item C, so it's an entity managed in Hong Kong. An entity being managed from the jurisdiction in Hong Kong. How do we determine that? The same issue came up in Hong Kong. So the fund managers are not in Hong Kong. They have an overseas company, and then when they sign an agreement or when they make investment decisions, that decision isn't made in Hong Kong. So does that count as an entity being managed from Hong Kong? When this person enters and leaves Hong Kong all the time, the same issue comes up often for the fund industry. Now, for the virtual asset managers, they are in the same position. How do we tell whether this is an entity managed in Hong Kong? Thank you. We responded to the same inquiry, so that's a question coming from the legal advisor. The proposed 15N covers the nexus requirement on being managed from Hong Kong. How do we define that? By being managed in Hong Kong, we mean that the actual management of the entity. So this means the most senior officers of the Hong Kong, say the board of directors, where do they make the decisions for this board of directors? The place matters. Where does this board act? This is the overarching principle. The IRD will also look at the fact. The board of directors may have flown to a place and make that place the place of management, but we also look at where they ordinarily make the decisions. Now, on the nuts and bolts, I will invite the Commissioner for Inland Revenue to tell us more. Thank you. Now, for CARF, management covers 2 points. First, the place of actual management. Second, other places of management. For the actual place of management, the Deputy Secretary has explained that point. So for the company involved, for the major corporate decisions and corporate affairs, where are those decisions made? That's the question. So that's what we mean by the actual place of management. And then it's possible there are other places of management. So the main decisions are made elsewhere, but there may be day-to-day decisions made in Hong Kong. That category is also covered under CARF here. For this framework, the OECD has expectations. If there is management in a place, that would be treated as a sign of a nexus. Thank you. Mr. Duncan Chiu, follow up? No. Mr. Holden Chow. In the government's reply to the submissions, there's a point. This is a point highlighted by KPMG. Now, for the minor violations, can we set a cap on the penalty? So this is for the minor breaches. Can we set a cap on the penalty? The government's reply in writing is that they have decided against this. So the government says it will follow the usual practice instead of setting a cap. But the government also states there will be flexibility. KPMG made a valid point. The concern for many is that after the bill is enacted, the compliance cost will be very high. There may be some trivial things, inadvertent breaches, essentially. The mechanism rate comes with a stiffer penalty when more accounts are involved. So it's about being proportionate. But there are minor cases, inadvertent breaches. So can we have some sort of guideline on a cap for minor incompliance? That will put minds at ease for the industry. So people are worried. You go after offenders every day, but some breaches are minor. So all those things may turn on the same matter. So I just want to hear from the government. Is the government ruling out this idea? Thank you. Deputy Secretary. On the penalty. So the penalty represents the upper limit. The IRD will take into account all the circumstances. For a certain fault, the penalty imposed may not be at the upper limit. If the facts are grave, the maximum penalty that can be imposed are those set out in the bill. Now, on how the penalties will actually be imposed and what factors will be considered, I will briefly discuss that, and then the Commissioner can tell us more. So first, we look at the intention. If the IRD thinks this company intentionally deceives someone, then that would be serious. We also look at the gravity of the offense. If it's just an account, there's a typo. Or instead, is it a systemic problem affecting many accounts? And then gravity also means we look at whether there is an attempt to mislead. The IRD looks at the actual circumstances. So the cap may be $10,000. That's the upper limit for a fine. So say $10,000 per account. If there are 10,000 accounts, can we cap the fine at a certain number of accounts? If we do that, that may not be very fair for larger organizations, because you will see larger organizations getting the same penalty as smaller penalties. Now, on the actual nuts and bolts, the Commissioner can tell us more.
Commissioner, thank you, Chair. On penalties, I would like to give some explanation. The IRD will try to explain the details on our website. We will have information on the new penalties and explain what our policy is. As in the past, as regards the other provisions of the Inland Revenue Ordinance, we also have penalty clauses, and we would similarly provide explanations as to how the penalties are being drawn up and what factors will be taken into consideration, and also the amount of the penalties and the factors that we will take into account. So all such will be included in our penalty policy. For this new offense, we will adopt the same arrangement. I would like to emphasize that we are not saying that we are not considering for the minor offenses or offenses of less gravity, we would give a lower level of penalty fine. We would be doing so. Actually, for the other provisions in the IRO, we also adopt the same approach. But the suggestion is that we should include a cap for the penalty. But for us, that will be difficult because the cases would differ from each other. For the RCASPs, they may be committing an offense. Some may be minor mistakes, but the accounts involved may not be that many. Then the penalty fine will be less. However, if a large number of accounts are involved and the service provider has committed a serious mistake, and the amount involved will be great. So that's why we think it is not possible to include an absolute amount as the cap for the penalty. So as I have said before, for our penalty policy, we will state clearly what are the factors that we would take into account. For example, why the mistake will be committed. Is it because of a system failure, or is it because of a human error? Or is it a mistake committed on purpose? However, also, how many accounts will be affected? Thirdly, how many years of the transactions will be involved? Because sometimes it may be a one-off mistake, but for other times it may be a consistent mistake. So these are all the factors that we will take into account so that the public would understand what are the factors that we will take into consideration. But please be rest assured that during the initial stage of the implementation of this new offense, the service providers may not be familiar with our requirements, and we will try to adopt a lenient approach at the initial stage. So we will also say this out clearly in our penalty policy. Thank you. So, Deputy Secretary, please continue with the CSAs. Maybe now I would talk according to the paper on the CSAs we have provided. The first CSA is that we have taken into account the latest views from the OECD, and we will state clearly that if the RCASP, if they have not effectuated any transaction for their clients, then they only have to provide a new return. So this will be a facilitation for the RCASPs. The second proposed CSA is in response to discussion with members. For the service providers which have been dissolved, the original requirement is that prior to the dissolution of the company, then the directors will be responsible for telling us, the IRD, about the changes of the address and the other information. We propose to move a CSA that, of course, they can all shoulder the responsibility collectively for retaining the documents, but we give them an alternative. The alternative is that they can appoint one of the director or a senior staff of the company before the company is dissolved, and that person will become the designated officer. So if they have appointed a designated officer, then he or she will bear the responsibility for retaining the documents, and the other directors will not be responsible for that. So this is a proposed CSA in response to comments received from the stakeholders, and it will be very clearly stated who will be responsible, and not all the directors will be responsible if there is a designated officer. But this is just an alternative, so an institution can decide whether to take this alternative option or not. For this proposed amendment, we will also state clearly that under such a circumstances, the designated officer will be responsible, and the other directors will not have to bear responsibility. Also, we would make a reference to Section 758(2) and (4) of the Companies Ordinance, which provides for similar situations, whereby if the designated officer has non-compliance with the record-keeping requirements, then they can use reasonable excuse as a defense. So we would make reference to the situation, the similar provisions in the Companies Ordinance. The next item, it is an administrative penalty. We proposed in Section 82E and 82F, it is about the penalty clauses, and we will extend the scope of these provisions to the designated officers, and that includes also the directors before the company is dissolved. Because of these three proposed amendments, they are under the CARF, but there is also a similar arrangement under the Common Reporting Standard, the CRS, and the AEOI ordinance passed earlier. So in last June, we have passed a legislation concerning automatic exchange of information. The next one are just textual amendments. For example, to provide clarity, like we have a better definition of the investment entity, we will replace trading in future contracts by dealing in future contracts. These are rather technical amendments to ensure that our legislative provisions will be consistent with the relevant ordinances. So these are the CSAs that we would like to propose. Thank you. Thank you, Deputy Secretary. If there are no further questions from members, we will continue with our clause-by-clause examination. At the last meeting, we have already started clause-by-clause examination, and we are talking about the definition of crypto asset. Let's see if we have time for the administration to explain about this one, and then we will move on. And we will use the markup copies for the purpose. And also, we will look at the blue bill. Page C200 onwards, I will defer to the government. Thank you, Chair. We note that last time, the discussion was centered around the definition of crypto assets. We have explained earlier that for this definition, we have deferred to the OECD definitions. And earlier at this meeting, I have explained that this is an international discussion by the OECD, and after that, Hong Kong has to follow it. We do have no room to change it. But I understand that for our various legislations, we may have slightly different terminologies. So we will try to step up explanation and publicity to the industry so that they will be clear about the definition and there will not be any misunderstanding. We hope that we will help the industry by providing more clarification and publicity. Also, there was a discussion concerning similar technology. Do you have further explanation on that? I will defer to the Commissioner. Thank you, Chair. For the definition of crypto asset, I think the discussion was more on the cryptographically secure distributed ledger technology or similar technology. Well, according to the OECD, they have the commentaries and notes, and it is explained that the blockchain technology is one of them. This is a more common technology nowadays, but it is also explained in the commentaries that this is not the only technology available. That's why we included words or a similar technology. We understand from the commentaries that any technology which is for decentralization and also it is to ensure security of transactions, then these will be considered as similar technology. So this is the explanation by the OECD. So apart from Hong Kong, I understand that other jurisdictions, if they undertake the CARF, they will also adopt a similar understanding of that term. Thank you. So let's move on with the clause-by-clause explanation. Any further comments? Members, please raise your hands. I will ask Ms. Lam from the IRD to take us through. I will continue with page 0006, and we'll talk about the various definitions under Section 50M. We have a definition of the CARF. This refers to the document, Part 1, released by the OECD on the crypto asset reporting framework. There are the rules and the commentaries. The next item is the CARF publications. A refers to the framework, the CARF. B refers to the document released by the OECD in December 2025. It is called the CARF Frequently Asked Questions. So the relevant publications are stated there. And we have to comply with the directions set out in the CARF documents. Please hold on. Mr. Webster Ng. For page C203, there is a definition for the CARF. I understand that there is a document from the OECD, and we have to carve out our legislation in accordance with that. So if there are changes, I'm sure that the IRD will take that into account. If there are changes, do we have to come back and revise our legislative provisions? Well, thank you for the question. Well, there is a document issued by the OECD on a certain date. If there are subsequent amendments, we would have to undertake corresponding amendments. But also, we have to see whether after the publication of the documents on CARF and the amended CRS, we think the chances of further changing these documents will not be great. But I think for the CARF publications, they are Part A and Part B. For Part B, you stated that there is the wordings as further updated from time to time, but you don't have the similar wordings for item A. So I don't know whether there will be additions after the publication of the document in 2025. I'm just wondering whether you need to include similar wording in our legislative provision so that we don't need to amend our legislation every time the OECD amends something. Let me explain. There are two parts. Part 1 is on the standards. So we will state clearly of the publication date of the document, and we refer to a specific document dated at a certain time. Mr. Webster Lam said that for the CRS, it may not be amended from time to time by the OECD. The reason why we stated clearly which document it is because we want to provide certainty, because these are the exact requirements that we have to comply with. So we have to state clearly the date of the relevant document here. And this also provides us with the opportunity that if there are a new document with new standards, then we will have the opportunity to review as to whether we would adopt the new standards or whether there will be other considerations. That is why we drafted the provisions in such form. Because if there are changes to the standards, there may be substantial impact on the industry. That's why we want to be more cautious. For Part B, it is only the frequently asked questions, and they may be setting out some notes and explanations. So this document is only trying to explain what are the requirements set out in the CRS, and it will not change the requirements in the CRS. For the FAQs, they will be amended from time to time, maybe several times in a year. That is why we think that it is not appropriate to say that we have to amend the legislation every time by subsidiary legislation, and that's why we add the wording of as further updated from time to time. But for Part A, these are the requirements under the CRS. That's why we want to have a more cautious approach.
Mr. Andrew Fan. Thank you. Based on the bill as drafted, when there are frequently asked questions, we also adopt the FAQs. I'm just asking hypothetically if, for geopolitical reasons, there's language targeting a particular region, and we follow those FAQs. Would that mean we will go against our own position? I want to reassure members that Hong Kong is part of the working group on CARF. For any standard and requirement set by the OECD on CARF for the FAQs and also the notes, we get involved in the work. Other regions are also involved. So our views are also noted in the process. Normally, the OECD proceeds on consensus among its members before adopting FAQs and also the replies to answers and notes for the FAQs. When there's a special case that is adverse to Hong Kong, this sort of scenario is unlikely. So we can adopt the FAQs as updated from time to time, so we don't have to worry about that. If we adopt subsidiary legislation instead, then things will be more difficult. Let's proceed. Next definition, and that is crypto asset user. Crypto asset users refers to an individual or entity that is a customer of reporting crypto asset service provider for the purpose of carrying out relevant transactions. So this can be an individual or an entity. We can also look at page 18 of the marked up copy. This is subsection 6. There are special provisions for the definition of crypto asset users when an individual or entity act as an agent, custodian, nominee, or some sort of intermediary for the benefit of another person. The crypto asset user in this context does not refer to the person or entity opening the account. So we look at the ultimate beneficiary party. That's your crypto asset user. Part B has another requirement. When a customer engages in reportable retail payment transaction or such a transaction and the amount exceeds 390,000 Hong Kong dollars equivalent of crypto assets. So when goods or services are purchased involving more than such an amount, if the local crypto asset service provider has to verify the identity of the buyer, then the RCUSP will have to treat this party as a crypto asset user. Now, on page 7, this is the money laundering So this is the AML KYC procedures. So the procedures to be performed for the purposes of anti-money laundering and know your customer. Now, turning to reporting crypto asset service provider. Now, this involves exchange. Exchange service provided as a service. The service provider can be an individual or an entity. The next definition is reportable jurisdiction. There will be a list to be released by the Commissioner for Inland Revenue under subsection 13B. This shows us whether the controlling party is something to be reported. The next definition is reportable person. It means an individual or entity that is a resident for tax purposes of a reportable jurisdiction. B, it says does not include an excluded person, which will be defined separately. When there is an entity. Now, for all excluded persons or entities, if an entity is an excluded person, even if this is a crypto asset user, the CASP will not have to perform KYC on this excluded person or report on this excluded person. Now we turn to pre-existing entity crypto asset user. Now this refers to an individual crypto asset user that has established a relationship with the HKRCSP as of before the bill takes effect. There's a difference in timing, and I will come to that later. Page 8, the common reporting standard. And this refers to the crypto as the CRS released by OECD. And then it also involves the amendments to the CRS, and that includes the rules and the notes or commentary. Now, depository institution. Now, they are the same as those under the CRS. The insertion is in C. An entity that holds specified electronic money product or central bank digital currencies for the benefit of a customer, so that will also be covered under depository institution. There's a note referring the reader to subsections 9 and 15. Let's turn to page 20 for subsection 9. When we read the definition of depository institutions under C, SEMP refers to certain product, and that covers A to E. So all requirements from A to E have to be met before something is designated as SEMP. So that includes a digital representation of a single fiat currency. And B is issued on receipt of funds for the purpose of making payment transactions. And C is represented by a claim on the issuer denominated in the same fiat currency and also is accepted in payment by a natural or legal person other than the issuer and is by virtue of the regulatory requirements to which the issuer is subject redeemable at any time at par value. And then we turn to page 22, subsection 15. This has to do with the SCMP. If a specified or electronic money product is created purely to facilitate fund transfers, that will be excluded from the scope of SAMPs. The reason is that we understand SAMPs as something you use for transactions. I'm sorry, can we pause for a moment? Mr. Holden Chow. Thank you, Chairman. My question is about SAMPs, specified electronic money product, and also the point about fiat currency. So we saw a list of requirements. I saw requirements D and E. A, digital representation of a single fiat currency. And then B is issued on receipt of funds for the purpose of making payment transactions. And then C is represented by claim on the issuer denominated in the same fiat currency. Digital representation of a single fiat currency. I'm thinking about this just by way of an example. If, for example, a certain stable coin is now linked to the Hong Kong dollar, so that's a single fiat currency. But if one day there is a stable coin referencing a basket of currencies, maybe it's linked to euro and a whole bunch of currencies, can we capture that under this provision, or is there a provision elsewhere that captures this sort of situation? Thank you. In that case, we will have to look at paragraph A. The product has to be the digital representation of a single fiat currency. If, however, the product references two or more currencies or more different forms of assets, that product will not fall under the scope of a SAMP. I find that intriguing. We don't have such a product yet, but if a new product emerges and this product references or is anchored to many fiat currencies, so the multi-currency product becomes a crypto asset, so that falls outside the scope. So am I right on that, Commissioner? A SAMP is excluded from the scope of crypto assets. So if something is a SAMP, that will not be treated as a relevant crypto asset. The SAMP is not reported within the framework of the CARF, but the SAMP has to be reported under the CRS. That means anything, if this product is not a SAMP, but it's also a crypto asset, that crypto asset will be covered by CARF. So there will not be a gap. So the product will have to be reported somewhere. We were at page 22, subsection 15. If a product is created purely for the purpose of facilitating fund transfers, that product will not meet the requirement or the definition of a SAMP. We were at page 8. The next definition is annuity contract. So this has the same meaning under the CRS. Now, page 9, exchange transaction. This means an exchange between crypto assets and fiat currencies, or an exchange between relevant crypto assets. As we can recall, a crypto asset service provider that engages in an exchange of crypto assets will fall within the scope of the framework. And then we move on to investment entity. This is part of the common reporting standard framework. The additions are under D3 and E3. So now it contains references to relevant crypto assets. Now we turn to jurisdictions and market. We now turn to service providers. This refers to Section 50U. Now this refers to the service provider that has the responsibility to report the transactions.
We are also referring to the service provider that has also engaged another service provider. Next item is fiat currency. Fiat currency means the official currency of a jurisdiction, and it includes the format by physical and digital forms, and it also includes digital currencies as well, CBDCs. And also, we have another definition of insurance contract, which is the same as the one in the current legislation. For SEMP, it is related to the depositing institution, and all the 5 criteria set out are the same. And it is only stated here that these are crypto assets. If a specified electronic money product, if it has fulfilled the requirements set out in A to E, it will be excluded. The next one is about government entity. The definition is the same as the definition set out in the CRS. Next is the relevant crypto asset. Here we stated the scope of the crypto asset, but it doesn't include CBDCs, SEMPs, or other crypto assets that has been adequately determined by the service provider as cannot be used for payment or investment purposes. Please hold. Mr. Duncan Chiu. Thank you, Chair. I want to ask about the relevant crypto assets. We have a definition of crypto assets earlier. Now we have a definition of relevant crypto asset. You said that the reporting requirements are different, but will confusions be caused because the definition are different? Is it that relevant crypto asset is the items excluded under A to C? If that's the case, for the definition of crypto asset, it includes CBDCs and then also electronic money products. So for the relevant crypto asset, are you just referring to the 3 items stated here? Yes, your understanding is correct. For the definition of crypto asset, we are saying that it is a digital representation of a value, and then it relies on a cryptographically secure distributed ledger or a similar technology for validation and to ensure secure transactions. So this is a definition for crypto asset. So if you fulfill these 2 requirements, then you are regarded as a crypto asset. But for the reporting requirements, the OECD consider that for some of the crypto assets, they may not need to be covered by the CARF. The reason being that the risks are low, or there may be no transaction function. So for the SEMP, it is covered by the CRS. So that's why they are excluded from the CARF. And apart from these 3 items, they would need to be covered by CARF. A follow-up question. If a person has different types of crypto assets before the coming into place of this legislation, so some of the assets may be regarded as crypto assets, and some of them may be regarded as relevant crypto assets, and some of them may be covered by crypto asset under the definition of OECD, but then for the SFC, they are not available to transaction by the individual users. So that means a person is holding crypto asset and also holding relevant crypto asset, and also they are holding some assets which cannot be transacted in Hong Kong. So he may use different ways to hold such asset. For the assets which can be transacted in Hong Kong, they will put in the platforms in Hong Kong. But then for the other assets which are not available for transaction in Hong Kong, he will try to hold it elsewhere. And how can he make a report? Because he has 3 different types of crypto assets. Well, thank you for the question. The first point is that for the reportable items, it is going to be done by the service provider. It is not to be reported by the user as such. So the user does not need to worry. So that means that he's not involved and with the platform reporting as well. For the items that need to be reported, it has to be reported by a RCASP and not by the investor himself. So we have already explained about that. So the CASPs will be the exchanges or the platforms or brokers. So if they have effectuated transactions, they will be required to report under CARF. But we are not talking about a circumstance where an individual is in possession of certain crypto assets. If the service provider has not effectuated any transactions, there is no need to report. Also, the service provider will have to make the report and file the return. We do understand that there may be a situation that when a service provider files a return, the service provider has to be clear about which type of transactions are covered by the reporting requirements. So OECD has already provided guidelines for us. For the definition of crypto asset and relevant crypto assets, we have to be careful to differentiate between the two to see whether an asset will fall under which definition. But the OECD has provided with a simple way to clarify that. Actually, apart from the definitions for the AML and KYC requirements, there is also a definition for crypto asset. And it is stated that if under AML and KYC, if a product is regarded as a crypto asset, then it will be regarded as a relevant crypto asset. So this is a simple way to tell whether the asset fall within which type of crypto asset, whether it is a crypto asset as such or a relevant crypto asset. So the service provider will have to make the delineation. And oftentimes, the service provider would have to undertake work under the AML KYC requirements. So they should be able to tell which type of asset would have to be reported under which mechanism. And they will be clear about which has to be included as relevant crypto asset. A follow-up. So OECD has some definition for crypto assets, but there is a definition that is being adopted by us in Hong Kong as to which crypto asset has to be covered. Well, for the service provider, they are dealing with crypto assets. My question is that there may be some assets which are recognized by OECD, but for the SFC, they do not recommend that such crypto asset be transacted in Hong Kong. So even if the service provider can provide a list of the crypto asset, it may not tally with the list under the OECD because some crypto asset may not be allowed to be transacted in Hong Kong under the requirements of the SFC as the controller for us in Hong Kong. So if some person owns such crypto asset, then maybe the service provider will ask a crypto asset not to include them in Hong Kong because they are not allowed to be transacted in SFC. But then, if they are covered by the OECD, will they also need to be reported under the scope of requirements? If the crypto asset user decides, maybe due to the different regulatory requirements, they want to put some assets overseas in an overseas account, or at another time, as Mr. Chiu has pointed out, because of the SFC requirements, they are recognized, then they may move such asset from an overseas account back to Hong Kong. Then the Hong Kong RCASP will have to consider if the customer has an account which has been updated and there are new assets coming into the account in Hong Kong, then the service provider will have to decide whether they have to make a report because of the inclusion of these new assets from overseas. So for the different regulation requirements and different regulations, there may be some difference in the definitions for crypto asset. As I have pointed out in the very beginning, for the CARF, it is drafted by the OECD, and we have to follow the definitions adopted by the OECD. And when we map out our legislation, we have make reference to other overseas legislation concerning the definition of crypto asset. There may not be a big difference between the definition because most of the definitions in the various places are actually very similar. There may be some difference in the minor details. But then, of course, there may be just some mild detail small differences between the two. I think in future we will issue clear guidelines as to what will be covered by relevant crypto assets. We will try to provide more examples of such so that the industry will understand what types of assets will be covered by the relevant crypto asset and have to be reported. So we will promulgate guidelines in future. Thank you, Chair. So I will ask Ms. Carmen Ken, who will be speaking for the first time. Thank you, Chair. I share Mr. Duncan Chiu's view. We are now talking about the definitions. We are trying to follow the definition and the requirements set out by the OECD. But I think it may not be exactly the same as to the scope that we want to cover in the case of Hong Kong. We would like to move with the time. There are maybe new legislation coming into place concerning virtual assets, and there is actually rapid development for virtual assets. Mr. Chiu has pointed out that we are not asking the asset holder to report. We are asking the Hong Kong RCASP to report. The RCASP has to follow the OECD framework and has to see if it is a Hong Kong tax resident. So the issue is complicated because the service provider has to identify the scope to be reported, and the user has to find a service provider and see whether the asset will be covered by our legislation. So the matter is complicated. So the Commissioner has said that he will promulgate guidelines. I'm wondering, as in the case of the AEOI legislation, can we have some Q&A sessions? Can you have kind of like a questionnaire, as in the case of the automatic exchange of information? If there are places that they are not clear about, then the service provider would have to make reference to the OECD framework. We understand the scope that we want to cover, and we have an understanding of the OECD requirements. As in the case of page 12, it is stated that crypto assets does not include the several types of assets stated here. So we use the method of delineation.
I thank Ms. Khan for her suggestion. That's a great suggestion. On the website of the IRD, on when a CASP falls within this reporting framework and has to file a report, there are guidelines on the website. There's a flow chart on the website. So the CASP has to answer a question, and then it's like a decision tree, helping them find out whether they have to report the details. We have also looked at the practice elsewhere. We're considering a self-assessment tool. That tool will be available to CASPs. They answer a few questions, and then they can tell whether they fall within CARF based on the information they provide. Or maybe the assets they deal in or the services they provide do not meet the definition of crypto assets, and then they do not have to report the details. So we will provide such a tool for industry players to assess for themselves whether they have to report the details. Ms. Carmen Khan, I welcome this self-assessment tool. The government is a regulator. The self-assessment tool should not be the sole criterion for deciding whether a CASP is under an obligation to report. So there should be advice that the CASP should consult a professional. So that's true. The tool will be for a preliminary assessment. And again, the tool only proceeds on the information provided by the player. This framework has complicated requirements, so a few questions will not be good enough for us to tell whether the CASP has or does not have to report, and if needed, the CASP will have to refer to the legal provisions and consult a professional. The tool is there for industry players to perform a preliminary assessment. So the question is whether it is likely for the player to be a CASP. Is it likely for them to have to report, or is it unlikely? So that's just for the preliminary understanding. Ms. Carmen Khan. And we have Mr. Anson Lai here from the FSTB. Mr. Lai is from the Treasury side. I wonder, for the Securities and Futures Commission, they're also regulating the evolving landscape of virtual assets. So will the FSTB and the SFC talk to each other so that the self-assessment tool can keep up with the evolving market landscape? Mr. Anson Lai. The IRD's self-assessment tool will be based on the rules laid down by the OECD. So that tool will help the players to decide whether they have to report and what they have to report. For us, we will look into ways to facilitate the process for the industry. Now, if talking to the SFC can offer greater clarity, we're happy to do that. So close to the heart of members is this self-assessment tool. So can you share the flowcharts with us after the meeting just to ensure greater clarity? Mr. Holden Chow. I want to look at the definition of the relevant crypto assets. So we have CBDC, and we know what that is. And then there's also the SEMP. These two assets require no reporting by elimination. Now I have a question for C. A crypto asset that is adequately determined by a reporting crypto asset service provider cannot be used for payment or investment purposes. I have a question. Any example that is not used for payment or investment purposes? Do we have such an example? I cannot think of such an example off the top of my head. Do we have such a product, a crypto asset that is good for neither payment nor investment? So what good is such a product if there is any? So Commissioner, any examples? The OECD has provided examples. As we explained, crypto assets involve a special technology. It's a digital representation of value. So these are the two elements of a crypto asset. So if the technology is used, it's a digital representation of value. That asset is treated as a crypto asset. So it's a straightforward definition involving just two elements. So we can imagine. When it comes to digital representation of value, we discussed air miles or loyalty points. Those points and miles, as long as they adopt the technology, they count as crypto assets. But as you can understand, if I have loyalty points and I have air miles, does that mean I can take those points and miles for payment and investment? Not necessarily. That's why in the example from the OECD, we have seen that there may be air miles or loyalty points. People can redeem gifts for the points or miles. So if those points are only used in a very restricted scenario, so you can only use the points, you can only redeem the air miles with a particular carrier or a group of associated carriers, you only redeem the points in that system or those systems, but not elsewhere. And you cannot sell the points or air miles in a secondary market, so you cannot convert the points into cash. Once that is the case, the air miles may fall under the definition of crypto assets, but those air miles will not be something you use for payment or investment, and for that reason, this will not be treated as relevant crypto assets. Thank you. That's much clearer. Dr. Webster. As before, the commissioner said air miles are not treated as crypto assets or relevant crypto assets, so that should put minds at ease. Just then, the example was a very much a example in a restricted case. But what if you have an airline, usually in the airline business, and airline B purchases airline B, and then this airline expands in scale. So in that case, you no longer have a confined scenario because the airline expands in scope. Is there a way for the airline to bypass the framework? What we're talking about is subjective. So you have a small airline, but then an airline A can purchase airline B. Airlines are just an example. Other companies, such as supermarkets, can do something similar. They can merge and expand. Commissioner. True. One airline can be a huge airline. Think of the global airlines. Some airlines do joint ventures. So several airlines can run the same air miles program on a joint basis. So we have to look at the purpose and the spirit of the OECD's framework. reporting is required when the assets can be used for payment and investment. Now, for large airlines or multiple airlines, if those airlines are only for redeeming flight tickets or gifts within the group of airlines, there's no value for a secondary market. So the holder of the miles cannot sell the miles on the secondary market, and there's no value. That sort of case is not what the OECD wants to capture for this framework in terms of reporting. That's why those examples were cited. And that's why we have this condition here, a crypto asset that is not used for payment or investment. So this is the underlying reason. You may have several airlines teaming up. Even then, the air miles only work for those handful of airlines. That's not a major risk for the OECD. Now, but if the air miles give rise to a secondary market, and someone can sell the air miles for money on the secondary market, that changes the conversation. In that case, the air miles can be invested, can be traded, the value can go up. So in that case, the OECD will require action. Thank you. Ms. Carmen Khan. I have a question about relevant transaction. A relevant transaction means an exchange or a transfer of relevant crypto assets. Only those transactions are reportable. So my question is, by transfer, are we only talking about a change in beneficial ownership? There's a distinction between legal and beneficial ownership. But what if you have a custodian? So you're not transferring the beneficial ownership. Are those transfers also covered? What should we make of the word transfer here, Commissioner? The OECD has rigorous requirements for transfer. We're all clear on what an exchange is. So you exchange your crypto assets for fiat currencies, or you exchange one form of crypto assets for another. So that's exchange. Now, transfer. The CASP is not sure if the transaction is an exchange. The CASP may be a platform. That platform receives crypto assets from one account, but the platform has no idea why this amount comes in. That may involve a transaction. Or when the platform sends the crypto assets elsewhere, the platform cannot tell whether a bank receives the payment. In that case, the CASP treats the movement of assets as a transfer. The OECD's requirements are as follows. When the CASP is aware that the transfer involves accounts held by the same person, that will not be treated as a transfer. So that should answer the question from Ms. Khan. The CARF does not include the concept of beneficial ownership, but there is a similar concept. If the original account holder is the same person as the recipient of the holder, the movement of the assets will not be treated as a transfer. It's about the fact that the CASP has no idea what's going on behind the scenes. The transfer may be an exchange. Maybe the amount was first received as a fiat currency, or maybe it's a transferring out of assets. So in terms of the reporting, that transaction is reported as a transfer. This is not to say all transactions are treated as transfers. So simply put, crypto asset service providers, or CASPs, have to distinguish whether the transaction is an exchange. If based on the existing information, the CASP cannot tell whether the transaction is an exchange, that transaction will be declared as a transfer. And when it's a transfer, the CASP looks at whether the movement involves two accounts under the same person. If not, the transaction is reportable. If it involves the same person, no reporting is needed.
Chair, what if it is a custodian? What if it is only providing a custodian service? Is reporting required? Well, custodian service is a kind of service. So under such situation, if there is a transfer, I think it doesn't have to provide it because it is a CAPS, and it is providing a custodian a service for the account holders and the users to make a transfer or exchange. Then it would be required to report. Deputy Chair, Mr. Andrew Fan. Very simple question about C. That is a crypto asset as adequately determined by reporting crypto asset service. What you cannot be used for payment or investment service? What about gambling or chance taking or speculation? How would you consider that? For example, like they are doing betting on soccer. Well, then it is speculation, not investment. Well, as I have just said, it depends on whether the crypto assets itself can be used for payment or investment purpose. We are now talking about the definition of relevant crypto asset. So we have to tell whether it is fall within the definition. So we are not looking into the details or the commodities for transaction. We are trying to see whether the asset itself can be used for payment or investment or not, because we have just said that for some crypto assets, they cannot be used for payment and they cannot be used for investment purposes. For example, we talked about the airline mileage programs. And we also talked about maybe a supermarket can have some royalty points or membership programs. So these are not under the definition relevant crypto asset. Well, Mr. Fan, you talked about some asset which can be transacted, but we have to see what is the nature of the transaction. We have to see whether it will fall within the definition of relevant crypto asset. Let me give you an example. If there are now 100 or 200 fans, or maybe a fan club, they get together to watch the soccer game, and then they say that the prize is a motor vehicle. If anyone wins, then they will win the motor vehicles. That means they are not doing an investment and they are not paying cash, but then interests are involved. Well, can I try to understand more about your example? You are saying that a motor vehicle is being bought. So which part of crypto assets is involved here? You talked about the airline mileage programs, and then you have some kind of a club. We can say that now it is the FIFA World Cup undergoing, and we try to form a club. And every member who joins us will have to pay a membership fee. So it is similar to an airline company. You have to pay a fee for entering this group. And then the price will be a motor vehicle. So by the end of the day, if who can guess who's the champion or how many goals are made, then you can win the motor vehicle. So in a way, it is kind of like a gambling game by a group of people, because you have payment of cash or you make a payment for becoming a member. And if a member uses a crypto asset to buy these membership points and to support the team that you like, then that means you are making a payment, but you are not buying a commodity and you're not getting cash back. But also, it is not an investment because it is a speculation. It is gambling. So I think Mr. Fan is asking about the membership fee. Are they crypto asset? As I have explained earlier, well, maybe I'll try to give you an example. For instance, if I use Bitcoins, and we use the Bitcoins for paying the membership fee, or we use the Bitcoin for buying a car, then I am using the Bitcoin to pay for the membership fee. And then we use the Bitcoins to buy a car, and then all the members can have some kind of activity, and then by the end of the day to see who will be the winner for the vehicle. In such a situation, the first question is that whether Bitcoin is a crypto asset. The second point is that if they use the Bitcoins to buy a car, is it something that needs to be reported under the mechanism? So there are two questions. First, is Bitcoin a crypto asset? Well, we all understand that Bitcoin falls under the definition of crypto asset, and it is also a relevant crypto asset because Bitcoin itself can be used for payment and transaction, so it is a crypto asset. We are now talking about that we use a crypto asset to buy a vehicle. Then we have to see whether the transaction itself would fall under the definition. Well, actually, earlier on, Ms. Lam has pointed out that for the items that need to be reported, is that the transactions for retail purposes which need to be reported, the reportable retail payment transactions, and it will be exceeding the value of $390,000, then that will need to be reported. So if you use Bitcoins to buy a vehicle, then because you have used a crypto asset to buy a commodity, if the car's value is above $390,000, then you need to report it. So you have to comply with the two requirements. First, you have to be a crypto asset. Second, you have to be a transaction that needs to be reported. Under these two circumstances, if these two circumstances are fulfilled, you have to report. So that means you don't need to report it if the price is below $390,000. Well, Chair, I think for the Chinese vehicles, they are very valuable, and they may not reach the cost of $390,000. So under this example, it does not need to be reported. Yes, if it is only for retail transactions, then there is a threshold, and this is being set by the OECD. If it is just a small transaction and it needs to be reported, then the system will become very complicated and there will be pressure on the industry. For example, if we talk about other transactions, if the crypto asset is being exchanged for a fiat currency, or if it is being exchanged for two types of crypto asset, then they are not confined. Maybe I'll follow with the commissioner after the meeting. Okay, Ms. Lam, please carry on. The next item is Hong Kong RCASPs. Well, under the CARF, the RCASP would be including the service providers who have the criteria to report, but then there may be linkages to other provisions in the bill. Here we talk about the Hong Kong RCASPs. That means they have fulfilled the criteria set out in Section 50N1 and 2. And therefore, they have to report and undertake the compliance requirements. And for the individual crypto asset user, we are talking about individuals here. For passive income, there are several items. It complies with the dividends, interest, and also income relevant to interest or dividends or other transactions. So these all will be regarded as a passive income. Next, we come to custodian institutions. Ms. Carmen Can? Chair, I have a question. On passive income, item 7, can you explain about that? It is talking about the gains or losses over the sale or exchange of relevant crypto assets or financial assets. It is the excess of the gains over losses. Is it relevant to the situation of AEOI, or are there corresponding provisions in the AEOI? Oh, actually, for Part 8B, we have to make reference to Part 8A. If it is related to the crypto assets, please point them out. If not, if these are not new definitions included, could you please move on quicker? So can you talk about item 7 here first, item A7, and also item A8? Perhaps I'll try to explain that. We are here talking about crypto asset transactions. It is very simple. If you try to transact a crypto asset, you may have some gains, and sometimes you may have losses. So here we are requiring that you are required to report only the excess of the gains over the losses. For passive income, they are actually also included under the other legislation on the AEOI framework. They are actually similar requirements under the AEOI framework. If you look at item 9, it is about the automatic exchange of information framework requirement as well. It is also talk about the excess of gains over losses. So for the whole definition, whenever we talk about transactions, and if there are gains or losses, then we only require the reporting of the excess of gains over losses. Is it within a certain period of time? You're not talking about every transaction here, right? Well, this is only an aggregate number. If maybe during a year they have certain gains and then they have certain losses, generally in the real world is that for the account, by the end of the day, there will be a net number of the gain over losses. I think let's take into account Ms. Kan's suggestion. If the provisions are similar to that of the AEOI, we can move on quicker. Thank you, Chair. We move to page 14 about the custodian institutions. These are also provisions under the AEOI. For the definition of financial asset, it is also the same. But we have included an item G here. That is, we have a reference to the interest of a relevant crypto asset. For the financial institution, definition is also the same as that of the AEOI. For international organizations, also a similar definition is under the AEOI framework. Next is the people who have to report. That is, people, if they are identified as reportable retail framework transactions. So these are the persons who will be required to report under the framework. The next item is on page 16. It is the reportable retail payment transaction. We have already talked about that. If the value exceeds $390,000, then it is also transacted in the form of crypto assets, then it will be regarded as reportable retail payment section. The next one is regularly traded. Also, it's a definition under the AEOI framework. Next, we move on to partner jurisdiction. We are referring to jurisdictions outside Hong Kong, but they also are undertaking the CARF reporting system. And then also, according to Section 13A, the lists provided by the Commissioner, they are covered. So we are talking about the other jurisdictions, and they are already implementing CARF. The other item is about entity.
So this is the same definition for the CRS. Sorry, Ms. Khan. Thank you. I have a question about the term partner jurisdiction, because it says and, so A and B. Both conditions have to be true before something counts as a partner jurisdiction. I'm trying to figure out how the user can achieve this. So there will be a list under Section 13A. Will we get to that, or can we talk about that here? So it's about the list to be issued by the Commissioner. The list will be on the IRD website, and that list will be updated from time to time. We will refer to the information from the OECD to see which regions have in place CARF, and then we will update our own list. Chairman, when we have a list of the partner jurisdictions, what does the CASP do? So they look at the list, and then they see if they have operations in any region on the list, and then they decide whether they have to report the transactions. Is that how it works? So a CASP may have nexus in more than one region. Let's say the CASP has operations in another region without CARF, so no reporting is needed in that other region. Now, it's only when the CASP has a higher nexus elsewhere, and then the CASP reports the details elsewhere. So that list is for the CASP to check if the other region is on the list. So if the other place of operation is not on the list, so the CASP has nowhere else to declare, so the CASP has to report the details in Hong Kong. Is that true? Commissioner, yes. If this CASP operates in another region without CARF, and then in Hong Kong, there will be CARF, so that CASP will have to report for the CASP to decide whether they have to declare or report in Hong Kong. The CASP will first have to think about whether they have an access elsewhere and whether reporting is done elsewhere. If neither of that is true, then it's very likely the CASP has to report in Hong Kong. Of course, a CASP can operate in many places. The CASP may have reporting obligations in other jurisdictions. Ms. Khan is right. If there are only two places involved, and those two other places, meaning the CASP operates in Hong Kong in two other places, but CARF is not in place in neither of those two other positions, then reporting is needed in Hong Kong. Now we come to entities. Those are straightforward. They also follow the practice under the CRS. Now, excluded persons. Even if this is a user of crypto assets, the relevant crypto asset service provider will not have to collect information on the excluded person, no due diligence is needed. This is because we're talking about low tax risk entities, including A, listed companies, B, the related entity of a listed company, and C, a government entity, D, international organizations, E, central banks, and the financial institutions other than those under E. Now, transfer, we have covered that a moment ago. A transfer means a transaction that moves a relevant crypto asset from or to the crypto asset address or account of a crypto asset user. Subsection 2, we covered the points up to 12. Now we come to subsection 13 of page 21. The commissioner can publish a list of partner jurisdictions and reporting jurisdictions in a way specified by the commissioner. As we said, there will be such a list on the IRT website. We discussed subsection 15. Now, subsection 16. Now, for terms defined also under the CRS, we have to construe the terms accordingly. Now, on nexus requirements for reporting CARFs in Hong Kong, there are 4 criteria here. A HKRCSP will be treated as such if they meet one of the 4 requirements. Dr. I have a question about a certain item. I have a question about 17. The Chinese term says the note here is only for information and has no legislative effect. So the question is about 17. It's about transfer. Subsection 17. There were some notes under the definition. The notes have no legal effect. But when a definition refers us to other provisions of the bill, those provisions are part of the interpretation. Those provisions will have legal effect, but the notes have no legal effect. Sorry, I cannot follow. Which note are you referring to? Chairman, allow me. Let's go back to page 14, custodian organization. At the bottom of a custodian entity, it says refer to see also subsection 7 and 8. So the notes have no legal effect. This is normal practice. 50N. HKRCSP. As long as an entity meets one of the 4 requirements A to D, that entity will be treated as an HKRCSP. A is the strongest nexus and D is the weakest. Subsection 2. If a reporting CSP is set up as a branch in Hong Kong and this transaction is done in Hong Kong, that will be treated as an RCSP. Subsection 3. Unless otherwise provided from subsections 4 to 9, the HKRCSP has to meet all the obligations under Part 8B. For subsections 4 to 9, when the CASP meets the nexus requirements in more than one tax jurisdiction, if the CASP has already reported in a region with a stronger CASP or completed reporting and due diligence, this CASP will no longer be required to report in Hong Kong. This is to prevent repeated reporting in multiple jurisdictions. Page 26, subsection 10. For the purposes of subsection 1. And this has to do with the tax residency requirement. It says when an individual or entity counts as a Hong Kong tax resident. Paragraph A, when it's an individual, it's someone who ordinarily resides in Hong Kong or stays in Hong Kong for a period over 180 days during a year of assessment or over 300 days in 2 consecutive years of assessment. And for a company, that's B, if it's incorporated in Hong Kong or if it's incorporated outside Hong Kong, but it's normally managed or controlled in Hong Kong. And then paragraph C, it's about the non-corporate entities. It's constituted under the laws of Hong Kong or otherwise constituted when it's normally managed or controlled in Hong Kong. Section 50O. This is the requirements about registration. An HKR CSP has to register with the specified system. Dr. Webster. My question has nothing to do with the provision. Now we were talking about the Hong Kong port area, the Huang Gang port bill. I asked a similar question. Once that bill is enacted, the Hong Kong port area will be counted as part of Hong Kong. So my question is here, subsection 10, someone who ordinarily resides in Hong Kong, in case the Huang Gang bill is enacted. So the Hong Kong here covers also the Hong Kong port areas. Is that correct? I think that's a clear question. For paragraph 10A, this is about ordinary residents in Hong Kong and someone who stays in Hong Kong. Hong Kong is not particularly defined under the IRO, so we refer to the Interpretation in General Clauses Ordinance for the definition of Hong Kong. I want to stress the point that it's about residents here. So when we determine the fact on whether someone resides in Hong Kong, it's not hard to reach a judgment. Whatever the definition may be, when we say residence, it's where someone works and lives. That's what we normally consider. So I think that's relatively clear on when someone leaves and enters Hong Kong. I get it. I'm just trying to take this point further. The member's concern is about the definition of Hong Kong. The question was about the Hong Kong port area. And then even in West Kowloon, there's co-location. Will that give rise to an issue about the definition of where the boundaries of a place is? So we refer to Cap 1 Interpretation and General Clauses Ordinance. Let's see if our law drafting colleagues have anything to add. I think we refer to the ICGO, or do we refer to other sources of information? Mr. Alan Chong. Under the ICGO, Hong Kong refers to the Hong Kong Special Administrative Region. There is a geographical extent to Hong Kong, so that's defined. On tax residency, for someone to live in Hong Kong, we look at the actual circumstances on whether that is possible. Now, I have not been involved in the Huang Gang bill. I am not aware of if there are consequential amendments to any other ordinances. I am with the Commissioner on his explanation. The Commissioner is clear, so the industry practitioners are clear on this. Here it says stays for more than 180 days in a year or more than 300 days over 2 consecutive years of assessment. I'm just thinking of the extreme cases. Now, the Hong Kong port area is not part of Hong Kong, but legally that is covered. That's why I put this question yesterday. Because we take the territorial basis as our principle. If I stay in the Hong Kong port area, then I meet their definition of staying. If this person stays there for a long term, then that person meets this definition here. Anything to add from the Commissioner? As our DOJ colleague said, Hong Kong is not defined under the IRO. So we refer to the definition of Hong Kong under the ICGO. If a person stays in the Hong Kong port area, then they will be treated as staying. But as the DOJ colleague also explained, we also consider the definition of Hong Kong under the ICGO on the extent that is treated as Hong Kong. As I explained, we look at whether this person ordinarily resides in Hong Kong. That point causes no difficulty. We all know what it means by someone living in a place. So you have to be in a flat, you have a workplace in the place. I note the member's question turns on the wording for staying. So you can just be in the place. And so the question is whether that place counts as part of Hong Kong, and that may trigger the requirement here. We appreciate the concern. But there's a definition for Hong Kong under the ICGO.
繼續。
Ms. Lam, please continue. For Section 50O, we're trying to say that if the service provider, if it has fulfilled the nexus for reporting, then they has to make the registration before the 31st of January of the calendar year following the calendar year. So the earliest one should be the 31st of January 2028. Now we move to 50P. This is about the due diligence obligations on the Hong Kong RCASPs. It is stated that the service provider must establish the requirements set out in Section 8B. That means they have to identify the crypto asset user and then also the controlling person's jurisdiction, and also whether they are the crypto asset user. And he has to collect all the information as to ensure that the KYC information would have to be kept for 6 years. And also we make reference to Schedule 17, and that will be incorporated in the legislation, Schedule 17EA. Now we move to page 29. It is stated that the obligations of the RCASP to furnish returns. So they have to undertake the due diligence requirements, and they have to provide the legal basis for such. Now we move to 50Q. It is the obligations of the Hong Kong CARFs to furnish returns. So they have to follow the written information provided by the assessor, and they have to furnish the information for the previous year. For Item 4 or 50Q, it is stated for the various situation whether the information has to be provided under the return. It is stated in A that subject to paragraph B, the information will be referred to in Section 50R. And also for item paragraph B, if the Hong Kong RCAPs is not required to comply with the due diligence requirements, then they can furnish a new return. If they have already made a reporting and undertake the due diligence under a different jurisdiction, then they have to stay so in the return. And then also has to point out under which nexus they have fulfilled such requirements. Now we move to Section 50R. This concerns the information required under Section 50Q. This is applicable to the service provider, which, sorry, can you please pause here? Legal advisor would like to talk about the CSAs. For the administration, you have stated that you will have a CSA. And you said that if there is a transaction effectuated, there will be some requirements. Can you elaborate on that? Let's move back to page 30. It is stated that under certain circumstances, the required service provider would have to furnish some information. In item 3 on page 31, it is stated that if the Hong Kong RCASP does not maintain a relationship with a crypto asset user that has been identified as a reported user or has relationship with the identified controlling person, they have to report the information. They have to report the information contained in subsection 7. For example, all the users, Hong Kong tax residents, then they do not have anything to report and they will submit a new return. So for the CSAs, we have pointed out that if there is a situation where the Hong Kong RCASP, if it has effectuated a transaction for a certain client, but then the clients are not reportable persons, or they are not entities that need to be required, and they are also not the controlling persons, then under such circumstances, the service provider would only submit a new return to IRD. That's why we would move a CSA to amend this relevant provision so that it will be more clear for this provision. Mr. Robert Lee, I'm concerned about, I want to move back. It is still under 50. It is stated in clause 5 that if there are more than one currency that is used for the transaction, then you have to be reported under the more common situation, whereby reported as a single fiat currency. Can you let us know more about the sort of the manner of transaction and how are you going to deal with that? For item 5 here, under the CARF, the Hong Kong CSAP has to report to us for the different transactions undertaking. For this paragraph, we're talking about the transaction related to fiat currency, and it is being exchanged for cryptocurrencies. Then they have to use the single fiat currency that is commonly used in Hong Kong for reporting. So for the conversion, that means they are using a market transaction value. If the fiat currency and the cryptocurrency, they are being exchanged. For example, if the service provider is buying in a crypto asset, then we will see how much fiat currency they have used for such a purchase. So in a way, we have to make sure that they are complying with the requirements. Would there be any controversies here? Because you have not stated very clearly. In the market, there may be different exchange rates and there may be different exchange requirements. It is not a standardized arrangement because they just undertake the exchange according to the prevailing market rates, and there are different methods for effectuating the transaction. So how can we ensure that they will fulfill your requirement for reporting, but then they may inadvertently make a technical mistake? and they have not complied with your requirement, because you are only saying that you just use the most sort of common way for transaction, will unnecessary disputes be arise because of the wordings here? So maybe the service provider would want to make a reporting, but they are reporting it in a way different as to what you would want to require. Thank you, Chair. We are saying that it will be the most common way used by the service provider, and the wording is actually similar to that of the OECD requirements. The reason is that we want to provide some flexibility here. For the CASP, they are undertaking a transaction, and then they have to have their own recording and ledgers. So they have their common way of doing so. And the OECD would not want to impose rigid requirements as to what exchange rate or what way of exchange would need to be undertaken. So here we want to point out what is sort of the most common way consistently adopted by the service provider. So we just want to allow them to use the way that they consistently adopted or most commonly adopted. For the records itself, or for the valuation or the time of the valuation, it would be the time for the transaction. You must use the day for the transaction for calculating the amount. You can't use a different date. So this is our first requirement. Second, we are using a market value here. If you use the daily average market value, or maybe you want to use the market value by the close of the day, we don't have a stringent requirement here. So only two requirements. First, it has to be exchange rate for the day of the transaction and the value calculated on that day. And second, you have to use a market value. You cannot just set a value by yourself. So under these two requirements, we would provide flexibility for the CSAP. They can use the daily average exchange rate, or they can use the exchange rate by the end of the trading day. So what you're saying is that so long as they fulfill the two requirements and they provide the sufficient evidence like the transaction records or the monthly records, then they will be able to comply with the requirements set out by the IRD, and they will not be considered as non-compliant. Perhaps I'll supplement. Your understanding is correct. Because we are here saying that they should do it in the manner that is consistently adopted by the service provider. If the service provider has consistently adopted a certain method and have recorded so in the same way, for example, if they use the transaction rate at the close of the trading day, we would accept that. Well, time is almost up. Any further supplement? If not, we'll call the meeting to a close. After the transaction, the information will have to be furnished to us, and it is stated in Section 50R. And we have stated the information that need to be furnished under the different scenarios. And for the valuation and the transaction exchange rates requirements, they are also stated here. I think we'll pause here, and then for the next meeting, we'll start from Section 50S. Any further questions from members? If not, thank you, the administration, for attending the meeting. We'll now move on to AOB. There are no AOB items, and we have not completed scrutiny of the bill. The Secretariat will inform members of the date of the next meeting. Meeting closed, adjourned. Thank you.